regulated. It falls under supervision of the national bank.
It's an investment grade country. Is there a big difference in between these areas compared to Czech Republic when you look at NBFI markets, or is it okay?
Czech Republic is Germany, and it's connected to the Volkswagen Group.
Hey everyone, and welcome back to Kilde Talks Finance. My name is Johanna, and we're here with Radek, Kilde's CEO and co-founder. And today we're going to discuss a topic that might be close to your heart, because we have launched an NBFI transaction in Czech Republic, which is where you're from. So you might be the absolute perfect person to ask for some details on Czech Republic. Why do we like them? What does the NBFI landscape look like? Let's start there, and then we'll add on as we go.
Thanks for having me, Johanna, and thanks about asking my home country, which by the way I didn't live in since 2006, so not sure I'm the best, but I'll do my best to answer without a bias, being from there.
Exactly. No bias and no mentioning of good real estate or good beer.
Oh, sure. All right. So Czech Republic, or also known as Czechia, is a relatively like a middle-sized country on the European terms, 10 million inhabitants, and it's one of the wealthier countries also in the Eastern European context. Interesting like number, it has a nominal GDP per capita in US dollar 31,700. It's already relatively high, but if you recalculate on the purchasing power parity, it's actually 49,600, almost 50,000 US dollar per capita per year. So that says a lot about the purchasing power of the Czech people. Also, it is a highly industrialized country, with automotive industry and heavy machinery and defense industry being the largest industries in there. The main export market for Czech Republic is Germany, and it's connected to the Volkswagen Group supply chain very heavily. Also, Czechs are good in software services, so there are many interesting industries, a lot of small and medium businesses, so pretty developed market. So what I would say in conclusion about Czech Republic is that it has a lot of features of a well-developed market, including, I mentioned, the GDP per capita. It has a slight account surplus, stable currency, inflation is about 2% at the moment. Unemployment is also below 3%. So developed market like indicators, but as an investor, in terms of pricing for the debt and pricing for the investment, the expected IRR are still like more to the emerging market territory, and that I believe it's a good opportunity for our investors, and that's why we invested in one of the NBFIs in the Czech Republic.
And specifically about NBFIs, what does that look like in Czech Republic, and how did we select the specific opportunity that we decided to invest in?
Sure. So the Czech lending market is highly dominated by the banks. The mortgage financing is the largest asset class in the balance sheet of the bank, and there are few notable NBFIs. A company called Home Credit, which we might know from Southeast Asia, India, and China, actually has been born in the Czech Republic, and the original operation is there. Also, we have a buy now pay later companies like Twisto is a famous buy now pay later, the largest one over there. And then you have non-bank financial providers which are catering to the near prime and sometimes subprime segment, which is completely omitted by the banks. and one of them we invested into. And the good thing about them that this part of the market is also regulated. It's falls under supervision of the national bank, and all the providers needs to be registered with the national bank, and they need to supply regular reports to national bank. They need to comply with certain reserve requirements, and they need to also comply with ethical lending requirements, namely the overall interest and fees for the loans should not be higher than the principal of the loan. So it's a relatively sensible regulation. There's no interest rate cap, but it's saying, okay, you should not make the loan unsustainable. Even in the case the loan will go bad, it should not exceed the principal. And one last thing I want to say about the lending market is that the Czech Republic is very efficient in terms of collection. So most of the non-performing loans are actually get collected in the end, even if it takes time. But because of the certainty, the non-bank lending providers can sell the non-performing loans very close to the principal value.
Oh, interesting. And in those surrounding areas, because we're quite active in Central and Eastern Europe, you have other areas that we've invested into, the Balkans, Poland, for example, which is an investment grade country. Is there a big difference in between these areas compared to Czech Republic when you look at the NBFI markets, or is it okay to club them together a little bit because they have similar traits?
Well, Poland and Czech Republic are culturally very similar. Poland is a larger market, so that's a big advantage of Poland. But in terms of NBFI lending, Poland has an interest rate cap, which force number of providers to start offering products in a different shape or form. At the same time, it led to innovation in the business model. We have one investment in Poland, and they have started cooperating with a local bank and offering credit card services to their customers with the cooperation of the bank. And actually that product is doing really well. So yeah, so there's always some constraint limitation unleash the creativity and business innovation.
Yeah, maybe we'll do a separate episode on Poland at some point as well. Thank you, Radek. And if you, as an investor, have any other question for us, let me know and we'll make sure we cover them in our next episodes. See you soon. Thanks.
Very well. Thanks for having me. Thanks, Johanna.